Well, hello and good morning and welcome to another video from Real Tail Trader. My name's Simon Gray. I'm a currency trader, FX trader, forex trader, whatever you wish to call me. It's Monday morning. Market opened last night at 10 p.m. I'm recording this from the UK, and Monday morning is always quite an interesting time in terms of the open for the market. I did a couple of hours work yesterday. In terms of setting up some stuff for the week, reviewing the charts, the 15 currency pairs that I trade, and also reviewing what happened last week. And what I'm going to do on this video is to share some of the analysis that I do, and also talk about some of the positions that finished up last week and where I am currently. Just to let you know that this is not an advisory service. I am not recommending that you buy or sell anything before you enter the currency markets. You need to know what you're doing, and should seek some independent advice. So yeah, this is just purely for education, purely for insight for anybody thinking about starting out in the trading arena, or for those more experienced, perhaps to get a different perspective on somebody else's approach and somebody else's edge. So as you can see on the screen, this was my trade management sheet from last week. I do a number of different things. I look at relative strength on prior week. I look at daily relative strength, and I look for overnight relative strength. So what I'm trying to do is to get a picture of the currency markets at various different levels: a longer term time frame, a kind of mid-term time frame, and then overnight, what's happened overnight, to give me kind of a perspective as to direction of travel, and to give me kind of a subconscious, I like to think of it as a subconscious feeling about where the market may or may not go. And the exercises that I go through to create this information, to create these results here, give me a really good overview of the market at various different levels, at the weekly time frame, the daily time frame, and the overnight time frame. So in terms of last week's performance, I trade 15 pairs. These are the 15 pairs that I trade. On this sheet, what I do is record all of my trades. Anything in orange is an order set to trigger, so buy limit or sell limit. Anything in red is something that's happened and closed out. Anything in green is an open position. So what I look for here, I'm trading three strategies, principally range and trend strategies. So for example, here, this last week was a losing position on USD JPY. I was short the market, and risk here of 337. Ultimately, the end result was 496. This was because of the broker cost, given the relationship in terms of interest rates of this currency pair. So that's the kind of not so good news. And when I looked last week at the relative strength of USD and JPY, they're quite similar. And what you tend to get if you have relative strength the same in any currency pair, in fact, let me show you, what you tend to get is this kind of consolidation, where the market's not really going anywhere. So I was short here. There was a spike up, probably on news, took me out, and then we're down here again, but we're going back up again. The market doesn't really know where it wants to go, and that's part of the reason for that is both the yen and the US dollar are strong. They're considered what's called haven currencies. So in times of risk off, so people are risk averse, then people tend to buy the dollar, people tend to buy the yen. So that's one of the reasons that this pair has gone nowhere, and one of the reasons that I'm now out of this pair and not looking at it as a viable proposition. The better news last week was on the Australian dollar. I had a number of results here. This T is my target one on my first position, and then I was taken out by my trailing stop on 3 positions. So I was building or pyramiding into that market. So that was a really profitable trade. Let me show you that. So Australian dollar, here we go. So if you watch some of my earlier videos, you will have seen this before. Ultimately, stop position started here. I sold, where are we? I sold here on this candle. This was a sell limit on a range trade, and then I added and I added again. What I was doing is rolling my stop aggressively. I do some analysis here on simple moving averages and the daily 10 exponential moving average, and because here you'll see that all of the moving averages and the daily 10 exponential moving average were pointing to a sell signal, What I didn't do at the bottom of this range is set a limit order to take off my position in full, because I thought there was a high probability here that we may close under this 0.7000 handle for some more downside momentum. And if I look out here, you know, potentially quite a way that this thing could fall to one of that is one of the 10 and 5 year low. So potentially quite a way that this could fall if it decided to do so. So what I did instead is I rolled my stop aggressively, so that if the market did reverse, which it did, and took me out on Friday, I would still have a very profitable trade. And this stop was set automatically, didn't have to think about it. It took me out. The market looks to be now potentially reversing, but to be honest, I don't know. I don't know. So I'm just observing this this trade at the moment. I'm out of this particular trade. There are two things that could potentially happen for me here. I could get a candle signal to the downside that would lead me to enter what I call a full house trade. I'll talk about that in a moment. Or I could get a exponential moving average cross above the 50 simple moving average up here, probably around about this level here, which could give me a clue to some more upside potential, where I'd probably buy that position, depending on how much room it's got to go, how much potential profit there is in that trade, and that will be a trend trade strategy. Okay, so other things that happened in the week. I was long on pound Australian dollar, hit my target 1, then got took out on a trailing stop. I talked about that in the previous video. There was some overhead resistance from I think it was the 50 simple moving average on the daily chart and the 200 simple moving average on the 240 chart. Couldn't quite get above there, taken out on a trailing stop, but still quite a nice profitable trade. This trade I'm currently in, Euro JPY, so I am buying the Japanese yen and selling the euro. Let's have a quick look at that. So let me change charts here to go to my synthetics. Synthetics are my cross pairs. So not the major pairs against the dollar, but my cross pairs. Now, what's interesting is there has been overnight news from Spain in the euro, Spanish elections. Now, I don't trade the news, but what I do is tighten stops ahead of news to protect my position. So knew this was happening yesterday. I use something called Forex Factory to know what's coming up in the trading currency world in terms of news. I don't trade news, but I do protect my position. My job at all times is to protect my capital. If I protect my capital, then I have an opportunity to trade again, even if I'm taken out on a break-even stop or I'm taken out for a slight loss. What I'm looking for is the big movers. This is the pound Australian dollar trade. You'll see here, it was the I've taken the lines off here, but basically I bought around about here, took off half the position around about here, and then the market reversed, got stuck under here and got stuck under here, which interestingly were at the same levels. I always think that's quite interesting when you have simple moving averages on different time frames at the same level. I call it simple moving average confluence. That's probably an important level to observe or to protect yourself when you're running into that. So let me get back to this Euro Japanese yen short. Okay, so what you can see here, very similar trade to the Aussie dollar trade. Again, range trade here. I decided I would hold in case we broke down underneath here. A long way for this pair to fall. Look at this, wide open space here. Long way for this pair to fall if we get underneath this range bottom. And if you look here on my Euro JPY analysis, you'll see it's all sell signals, sell signals, which is why I didn't set a limit order to take me out of the bottom of the range, which I would if I didn't have that full house of signals. Now, what's happened here? I took a position up here, took another position here, took another position here, and I've rolled my stop aggressively, very aggressively. In fact, Normally I like to try and keep my stop beyond the 50 simple moving average. I use these lines. This is the 30 exponential moving average and the 10 exponential moving average. Their position gives me a clue as momentum of price action. Now here what we're seeing is some consolidation along the bottom. This candle, which is the 10 o'clock candle, has not closed yet. We've got another 40 minutes. If that pushes down and closes below the high here, there could be a clue for some consolidation and some further downside momentum. Now, I've rolled my stop aggressively. That stop has not been triggered as yet. If it is triggered, that's fine. This is still a profitable trade. So I'll just wait and see. I'll wait and see what happens at 10 o'clock. I only make decisions based on the close of a candle, not while the candle is trading. But at the moment, my position is holding, and I'm hoping for some downside momentum. I don't like to use the word hoping, but my edge dictates that I will hold now and see what happens. The other trade that I now have on, which I set this morning, is in the Swiss franc Japanese yen, and I'm short on this particular pair. So effectively, I'm buying the Japanese yen and selling the Swiss franc. Now, their interest rate differential is quite interesting. They're both what I would call, well, what people call haven currencies. So 3 haven currencies: US dollar, Swiss franc, and Japanese yen. People tend to buy when they're nervous. I like this pair a lot, Swiss franc, Japanese yen, because they're both haven currencies. I tend to see, based on my history of trading this pair, I tend to see fairly uniform price action. It seems to be one of the more easy pairs, if you like, to predict. And I've made quite a lot of money on this pair in the last few weeks. Important, you don't get a bias towards a particular pair or not. You take the signals when they show up. But yeah, let me just explain what's going on here. So if I look here on my analysis, and I'll talk about this sheet in a moment, I have a full house of sell signals on the SMAs, simple moving averages, and the exponential on the daily, which is here. So I am looking for what I call a full house trade. So you'll see here on the daily charts, you'll see that on Thursday of last week, this was Thursday, Friday, and today, there was a YX candle signal. All that means is it's some proprietary programming in my Trade Navigator platform. All that means is that this candle closed below the low of the previous day's candle and engulfed this candle completely. So the filled in bit, the open and close, engulfed the previous day's candle body and the low. It took out the low. So that's a YX signal. That's a good signal for some downside momentum. And then if you look here on the 240 chart, the 4-hour chart, you'll see I have what's called an X signal. So X signal here, slightly different to the YX signal here. You see the YX signal here, the close of the candle took out the previous day's low. Here, this is an X signal, I should say. It means the body of the candle engulfed the previous 4-hour period's body, but we didn't close below the previous 4 hours low, which is why it's an X signal and not a YX signal. But still a good signal for downward momentum. So this was on the 10 o'clock bar on Friday. So I looked at this yesterday. The market opened. Impossible for me to, well, not impossible, but I didn't short here because the spread was too wide. When the market opens, the spread in the broker accounts tends to be far too wide. It was about 7 points last night, so I waited overnight. When I shorted this position this morning, we were on this candle, which hadn't closed above the high of the X candle. As a result, I've shorted, and the reason I've shorted is because all of the SMAs are telling me downward momentum. This is the 240 chart. I've got the 10 exponential moving average, I've got the 30 exponential moving average, and I have the 50 simple moving average, all pointing down, all pretty equidistant, uniform. and I think there is a good possibility that this pair will continue to trade lower. There's nothing below. There's more resistance, if you like, up here. The path of least resistance is down. My stop here is outside the 50 simple moving average. It's also, interestingly, outside and above the Thursday candle, which made this YX signal. You see here on the daily chart, this was the range that I was previously trading. It's not colored yellow now because it's no longer range, it's bearish market in my analysis. And I traded this position a number of times. I bought, sold, so I traded this pair 3 or 4 times backwards and forwards when it was a range. Now I'm looking for more downside momentum, or not, as the case may be. And what I could find here, if this does go up here, it does stop me out. There could be a signal for a trend in the reverse direction going back up here if the 10 exponential moving average on the 240 chart crosses the 50 simple moving average, but time will tell. So that's where I am at the moment. Nothing really to do now apart from check the charts at 10 a.m. And see where this candle in particular is closed. May get stopped out of my Euro JPY short. That's looking quite likely now, but who knows. My job is to know what I'm doing and to have an edge and a structure to trade what is a very unstructured environment. The currency markets are very unstructured, so my job is to have structure, have rules, and to stick to those rules no matter what, which is what I do. Discipline is everything, and the value of your broker account, the value of your profit each week is determinant on your discipline alone. It doesn't really matter what your edge is. Your edge will be personal to you, but it's important that you have one and you stick to it no matter what. So let me just talk briefly about this. This is the analysis that I do every day. This is my weekly market analysis. I look at for example, on the pound dollar, I look at the position of price in relation to the weekly 200 SMA, the 50, and then on the 240, I look at the position, on the daily chart, I look at the position of price in relation to the 200 and the 50 and the 10 exponential moving average. So these are SMAs, simple moving averages, and an exponential moving average. And then I do the same here on the 4-hour chart. When I get this kind of thing here, that tells me, well, I call this my full house. The market's pointing in one direction, and a bit like a large ship. If the ship's going in one direction, it takes quite a bit of momentum to turn it. So there is a high probability that we'll continue to go lower. There may be some fluctuation up and down. So when I get this set up, as I had on the Swiss franc Japanese yen, I look for a candle signal to show up, and then I look to get on board with a stop outside of structure. So yeah, that's what I use this for. I also keep these notes up to date. Anything in capitals is my assessment of the weekly chart. Anything else is daily or 240. And then what I do here, I put notes. If it's orange, it's kind of hold, amber, like traffic lights. You know, watch for up cross or full house. Watch for up cross or full house. If I have a trade in play, which I have on Euro pound, which I haven't talked about, I'll talk about that in a moment, then it's in green. If it's in orange, I'm waiting. This is green with brackets. It's fully protected, which means I've got a profit in that. I can't lose money on that trade, and so on and so on. Let's just quickly look. There we go, Euro JPY. Let's just quickly, that's why you have a stop loss, trailing stop. Let's just quickly look at Euro GBP. Okay, so this was a position I sold on the 25th. So a few days ago now. This was a cross of the 50 simple moving average. It's also a range trade. It's kind of a range and a trend trade all in one, and we're gradually building some downward momentum here. Be interesting whether we get through the 200 simple moving average on the 240 chart. I'm going to take off half the position here, and then here down at the bottom. Let me just have a look. Euro GBP, yeah, it's all a bit mixed on the simple moving averages. So what I'll do is when we hit this, I'll set a limit order to take my position off down here and probably reverse and buy the position back, but we'll see. Anyway, that's it. I'm going to process this video. Hope you found that useful. If you enjoyed this content, and this content is all about me telling the real story of what it's like to be a currency trader that trades from home. If you like this content, please hit subscribe button and hit the notification button. Then whenever I publish a video, you'll get a notification in your browser, and possibly, I think, via your email as well through YouTube. So please give it a subscribe, give it a like, and until next time, take care, trade well, and I'll talk to you soon.